Can your investments have a positive impact on the world? At Standard Chartered, we believe money can be a force for good. Through your sustainable investments with us, we're financing hospitals that are the heartbeat of local communities, funding clean energy to make electricity more accessible, and investing in innovative solutions to clean polluted marine habitats. Sustainable investments that benefit you and parts of the world that need it most. We're Standard Chartered, and we're here for good.
Hello and a very warm welcome from me, Manisha Tank, on the inaugural panel of the Standard Chartered Global Credit Conference, Opportunities from Disruption. It's great to have you with us. Today, we're going to be addressing the fact that no magic formula is needed navigating a changing global credit landscape, and we have a great panel lined up for you today. Before we get to introducing our wonderful guests who are here with me in the studio and also down the line from both Beijing and London, let me run you through some of our housekeeping for the panel today. This session is being recorded, and you will see a number of icons on your screen that will direct you to the fact that there is a Q&A that we are going to run concurrently throughout the panel. So yes, you don't have to wait until the end to pose your questions. If you hear our guests speaking about something that you're very interested in and you'd like to learn a little bit more, why don't you send us a question? Maybe tell us who you are or stay anonymous, but we would love to share your names with our global audience. Send in your questions. We will vet them, and I will weave them into the conversation wherever possible. So without further ado, I want to introduce you to our panel today. We have with us, first of all the way to my left and your right, Henrik Rabe, who is the Global Head of Capital Markets at Standard Chartered. Henrik, good to see you, and great to be here with you in the studio, socially distanced.
Thank you.
Very
First
nice.
time in a while that we've seen each other.
Absolutely. Also to my left here and to the middle of your screen, Harry Cho, who is the MD at SGX, Head of Sustainability and Sustainable Finance at Singapore Exchange, from right here in Singapore. Again, lovely to see you.
And you too. Thank you for having me.
Oh, it's absolutely our pleasure. Joining us down the line from Beijing, we have Andrew Cross. He's Chief Financial Officer at the Asian Infrastructure Investment Bank. A very warm welcome, Andrew. How are you doing?
Very well, and good afternoon to you and to all of the attendees and my fellow panelists.
Yeah, you're going global and live, so don't do anything on screen that you wouldn't want anyone to see. And joining us, someone I've had the pleasure of speaking to many times recently, Daniel Hanna, Global Head of Sustainable Finance at Standard Chartered, joining us from London, where I hope the weather is good for you today, Daniel. I'm English as well. I have to talk about the weather.
It is. It's a little bit sunnier, as you can see, so no, it's great to be here. Looking forward to a great panel. Thank you.
Excellent, Daniel. Thank you for that. Okay, so for all of our audience, let's just do a bit of scene setting, shall we? We are now halfway through 2021, and I'm sure many of you were hoping that it was going to be very different from 2020. Yes, vaccine rollout is happening in various parts of the world, but we're already seeing great inequity in how it's happening. That's going to be one of the things that we will talk about on the panel in a little bit. It also means that economic growth is picking up, but again, we're seeing a big difference between the haves and the have-nots. We've also seen in the last year and a half or so some big mega trends developing, and trends which are accelerating because they really have to as we accelerate to a very worrying future. And we want to talk about whether purposeful finance is the answer to solving many of the world's problems right now. With that, I want to share a quote that was actually in a press release that was put out, Harry, when you took your position at SGX earlier this year, and you were asked about this new role that you had, and you said, "We don't have any time to waste to ensure our planet is livable and our communities thrive." And I wanted to share that quote just at the beginning because I think that's a great jump-off point to talk about some of the big issues that will be discussed across the conference over the next 3 days or so. So on that note, let's pick up with Henrik, first of all. Henrik, I'd love to know, what are your hopes and aspirations for the next few days? And can you point to some of the big issues that we're going to be talking about?
Thank you for the great introduction, and welcome everyone to the credit conference for 2021, and also welcome to my fellow panelists. We are living through relatively unique times, and with disruption, we felt there was also going to be a lot of opportunity. The past year has been quite unprecedented also in terms of financial liquidity that's been provided by the central banks. Also, that has led to ultra-low interest rates. For us, that's propelled many of our credit markets in different directions around the globe. For example, the US has seen investment credit spreads hit 14-year lows. As a backdrop against that, we think there are two megatrends which are going on that we like to discuss as themes throughout the three-day session. Firstly is digital transformation, and the second one is the global acceleration of sustainability. During this conference and across many of the sessions, we'll cover themes around innovation, sustainability, and directing financing to where it's required. We are also now potentially entering a period where we will see the peak liquidity and the peak liquidity pass. And with that, we think there's also going to be a lot of opportunities where the private sector is going to need to step in, for example, in infrastructure. Moreover, we also expect to see financial sponsor activity pick up meaningfully through this period. We've also been working, all of us, in very different environments, and we've seen digital exponentially move forward. But in some of our financial markets and some of our products, it is still actually lagging. For example, we're still having a lot of wet signatures going on around our documents for certain financial transactions. There is, this conference itself, in a pre-COVID period, would most likely have been done physically. And here we are conducting it virtually. And thank you to all the audience attending around the globe today digitally. As an interesting fact, if we had continued without the digital experience, last year we would have saved about 23,000 kilograms of greenhouse emissions, which would have been through serving animal proteins at our roadshows. So 23,000 in terms of kilograms greenhouse savings by not doing the roadshows. A great step forward. Of course, digital has many answers, but it's not the sole answer to all these problems. That 23,000 would have been equivalent to a car going around the Earth 2.5 times. I think that's also a good segue into me just to briefly touch upon sustainable financing, which we'll be talking about extensively today and throughout the forum. There's been an exponential increase in demand for investors, both on bonds and loans, wanting exposure to green or other forms of ESG financing. As an example, year to date, 2021, bond issuance has already reached 75% of what it did in 2020 in terms of green bonds. 2020 itself was also a record year where issuance was up 81% to the previous years. The loan markets, they are also seeing a huge change in green financing or sustainable linked loans. Loan volumes are up 15 times over 4 years. That is quite a dramatic change. So we look forward to a really exciting conference. Thank you, Manisha, for the introduction. We have a range of panels coming in the next 3 days, very specialized and more broadly, and I'll hand it back to you.
Thanks so much for that, and thanks for sharing that really interesting fact. I think it gives us sort of a different perspective on things quite considerably. Speaking of perspective, I want to take it out to Beijing, and let's check in with Andrew. You heard there, Andrew, about some of the megatrends that we're addressing over the course of the conference, particularly digitalization, but of course the conversation around sustainability. I was really curious how things, though, look from your angle over there in China.
Look, I really appreciate the question, and first let me acknowledge Standard Chartered for hosting this event and for inviting AIB to participate. I mean, if I pick up some of the themes that Henrik was talking about, clearly infrastructure is important to us. I mean, it's in the name of the bank, so it's pretty obvious our focus. If I look at Asia, though, if you look at the downturn in economies that's occurred in 2020 and 2021, on average, Asia's downturn was not as significant as the rest of the world. And if you look at the surge back, you have recent year-on-year GDP growth rates of expected forecasts of numbers around 10 or 11% for countries like India. I mean, I think that also goes to some of the issues that we have with statistics especially in this environment of, forced shuttered economies and the credibility of the data. And that might be something worth exploring later. But if I think about sustainability, I mean, the bank had a strategy agreed and approved by its board in September of 2020, which is all around infrastructure for tomorrow, which is really around environmentally, financially, and socially, all inclusive, all local, regional, and global combination of physical, digital, and social services. And I think the debate around infrastructure inevitably builds in so many components. I mean, Henrik was talking about, the involvement of the private sector. Inevitably, people start talking about regulatory risk there. People are talking about investors, and, we see more growth around bonds than loans. Inevitably, then people talk about standardization. And it's not that we have competing taxonomies, but this might be a sad reflection of my life, but I spent the weekend reading the EU's taxonomy, which is, I always thought it was 600 pages. It turns out it's only 414. What a light relief that was. And prior to that, you had the PBOC document that came out on the green principles around 2014. So in a sense, I mean, I think it's very foresighted of Standard Chartered to pick the opening session to be, I think, predominantly around infrastructure, because infrastructure encapsulates so many of the issues that we're dealing with. The possible prize of digitalization, where sometimes people get very excited by the hope of it without necessarily thinking about the consequences of it. People, when they think about infrastructure, also inevitably think about the social aspect without maybe realizing the significant underinvestment that has occurred in health over the last 10, 20 years, possibly because health ministries don't tend to be the most powerful ministries in governments. And then again, infrastructure inevitably forces you to think about the longer term, the short-term income, the longer-term growth, and then that ties into interest rates. So again, I mean, I appreciate the question. I need to sort of stop and try and be a little bit focused, but I think when you talk about infrastructure, you inevitably talk about so many combinations, and we haven't even touched on digital divide and how poverty alleviation and then transition from carbon to carbon neutral. So let me throw all of that out there, because I think this is a really important conference. I think the panel is a good starter for lighting fires on so many really, really important issues. And I think AIB, through its focus on Asia, through its focus on infrastructure, is really trying to make a contribution that is sustainable and long-term and has a benefit to the population in the region. Thank you.
Thanks for shining a spotlight on that. In fact, that's going to be the subject of one of our panels later today, where we talk about infrastructure in Africa. I'll be very curious to see how that compares with infrastructure build out in Asia and whether there are lessons that can be exchanged between the two. Let's jump to Harry, who's here in the studio with me. And Harry, what I want to talk about, of course, is the pressure that's coming from boardrooms to make sure that we're on this journey towards greater sustainable systems, but also decarbonisation, all part of that conversation. A very important venture was announced very recently involving SGX, Standard Chartered, DBS Bank, and also Temasek. Tell us a bit more.
Thank you so much for that. Yes, so when we talk to chairpersons, chairmen, chairwomen, it's very clear that sustainability is at the apex of corporate discussion, and what should be the role of the board and what should be the role of the management team, and how do you weave that together throughout the whole organization. Now, pertaining to the venture that you mentioned, Climate Impact X, it originated already more than a year ago when there were conversations when COVID first hit, including in Singapore. And there were discussions as a private-public partnership and initiatives. How do you build back better, right, from the hit that the economy took? And how do we ensure that the climate does not suffer, which is one of the most urgent actions that still need to continue to be acted on, even though we are in the middle of the pandemic of our lives? And that's when the Alliance for Action for Sustainability was born. And the carbon exchange idea was one of the birthstones from that. And there were many, many months of toil and checking with both the potential suppliers of carbon credits. So let me talk about what the venture is actually about, in fact. Climate Impact X is a carbon credit exchange as well as a marketplace. So there are two parts to the venture, which will be launched by the end of the year. So we just announced for the launch a couple of weeks ago. So the exchange would be all about bringing high-quality carbon credits, initially focusing on natural climate solutions, to the market en masse with transparency in quality, in price, at volume and scale. So the whole point is that we try to scale the markets. The marketplace, on the other hand, is in recognition of the fact that there are still clients and buyers who would prefer to go down the bespoke route of acquiring carbon credits, still high quality, and therefore the marketplace allows for a bit more bespoke rather than standardized carbon credit acquisition. So with the natural climate solution focus, we hope this being in Singapore, headquartered in Singapore, initially looking at the solutions that are surrounding us here in Asia. We're surrounded by forests and mangroves and rainforests that we can help to protect and conserve and reforest with the funding that would be channeled from such exchange and marketplace towards these projects. And Singapore would be a perfect place for that, given that this is a city-state that's known for its legal structure as a financial hub and as a commodities hub.
And very briefly, Harry, I just want to follow up on something because it's part of our core themes. One of the things, of course, that Singapore benefits from is the high-speed digital infrastructure, right? It has this foundation on which you can build. And we've been talking about infrastructure. You know, Andrew was talking about that in the physical sense. We can also talk about it in the digital sense. And we're talking about how we can then build on that, particularly when it comes to the journey for a more sustainable future, right?
Yeah. Absolutely. So I cannot stress enough how important it is to combine. So technology is not a means to an end. It is means to a goal. And dare I say, in many ways, technology should be utilized for good of the society, including furthering the sustainable development journey, this colossal journey that we all have to go on. Now, some say that the original fintech in the whole world are actually exchanges. You know, exchanges were really at the heart of financial technology. So based upon that, ideas like the Climate Impact X make perfect sense. And for that particular exchange, we will be leveraging on technologies such as satellite, blockchain, where that would enhance the quality. Now, just very briefly, when we talk about exchanges and the financial capital markets and the system in general, there is this overall trend to ensure that the financial asset classes are also becoming more efficient and digitalized. So, for example, we have a project at this point through a JV called MarketNode, where we're looking at the end-to-end digitalization of bond process, all the way from the issuance, where the likes of Standard Chartered and bankers originate and work together at the documentation process, all the way to book building, settlement, and the whole lot. And embedded deeply within that would be sustainability data that each of the ecosystem players would actually require to ascertain the quality of the financial asset class.
Well, let me pick up there because I think that's a great point at which we can check in with Daniel in London. Daniel, we've talked about this before. It's all very well to have these initiatives available, but we need to be able to monitor impact, don't we? And now we're getting more data than ever before that allows us to do that.
Yeah. Excuse me, sorry. I think Manisha, it's a great question, actually. And I think that's one of the things that if I was to pick up on a couple of themes that Andrew and others have talked about, I mean, sustainable finance has a couple of real challenges. One is that there is a real alphabet soup of different definitions, taxonomies, and standards out there at the moment, which I think is holding the industry back and is absolutely key that we standardize to really unlock. And actually, one of the very powerful things about Climate Impact X and the Task Force for Scaling Voluntary Carbon Markets that we're involved in, is to try and really standardize, if you like, carbon offset markets to see that capital go through in a credible way. But to your point, the other one that I think is worth watching is this issue about volume over impact. The reality is impact is what's really key here. We have, in the next 9 years, the need to reduce emissions globally by 45%. And we are a long way from achieving the Sustainable Development Goals by 2030 as well. And the question is not just how much volume of finance we can raise, but where that volume is actually deployed and what impact it has. And I'll give you one example from the impact report that we published last year. We financed a solar project in India, and that solar project had 7 times the impact in reducing carbon emissions from exactly the same type of project that would happen in France. So how you catalyze capital and move it from Lyon to Lucknow, I think, is absolutely key. And then how you measure that impact in terms of the climate and the broader impact it's having on society is absolutely critical to ensuring that we really make a dent over the next 9 years.
Yeah, great stuff. And actually, I want to pick up that point with Andrew. Andrew, Daniel makes this point, of course, about impact, and it's obviously very important. But previously, when we've spoken, you've pointed out some of the challenges that you face is that you've got various countries, economies in the area that you cover that are working on very different rates of progress. How do you deal with monitoring impact when you have that challenge, that disparity?
Yeah, I think it's. I think we have to accept it's tough. I remember working when I was at the World Bank Group. I worked on my first green bond in 2007, 2008, and sustainable investors. I mean, the word sustainable wasn't really very prevalent at that point. I remember sitting down with what we used to be called socially responsible investors. And this was much more sort of an equity-based investor that was much more sort of Quaker principle-driven. And I remember the hard work of trying to do a $200 million green bond. And this was sort of, I think the issue was 2009 in the end. You know, and then since I've been at AIB, we've done $3 billion benchmarks, sustainable bonds. And so, you know, clearly the tipping point has shifted. But then you look at the different standards. You know, I remember coming out to Asia and working with NAFMI, who was talking to ICMA at the time, and you know, the PBOC had just published its, I think, 14 green principles, and you know, the green bond market just shot off in China, and then you know, European Union pitched up with its taxonomy in 2020, and then the regulations. And so, I mean, I know that we're trying to sort of standardize. Everybody talks about standardizing, but I remember the debate back in 2008 to 2010 was you wanted to build a large enough tent that everybody could come into the debate. And I think Daniel makes a really good point on impact, but I want to challenge it a little bit in the sense that I think we still need to have really difficult conversations. I mean, if you think about the move from fossil fuels to electricity, and if you think about the sort of the graduated move from coal to gas and so on, one thing I found really, really interesting is if you look at the production of 1 gigawatt of electricity and the land that is consumed to be able to do that, all right? So if you've got a gas power plant, it's 13 acres. If you do this through battery storage, it's 600 acres. If you do this through a solar farm, it's 5,000 acres. And if you do it through a wind farm, it's 50,000 acres. So I actually think Daniel makes a really good point. There are no easy conversations here. We all know where desperately we need to get to because climate doesn't correspond to boundaries. But we also have to acknowledge that many countries are in different points of the transition. That transition is a difficult process to be. Transition finance, which I know Standard Chartered are involved in with a number of other banks, which means that you have to do, you know, that classic saying, don't let perfect or great get in the way of good enough. And so the only way we get to the standards and the goal that we need to do is that we have to accept that every country is different, has a different set of rules, regulations, philosophies and approaches. But they all seem to recognise that climate change is the issue, the long term for us. We have no choices about it. But we have to recognise that standards, data, information, that's not the sole issue here, and that we have to recognise that this is a difficult concept that's not solved by easy sound bites and press releases. Thank you.
Absolutely. And since there was a challenge in that, let me take it back very briefly to London, Daniel, to give you an opportunity to respond. Obviously, these sorts of difficult conversations, they must come up for you all the time in your role.
No, I think that's exactly right. And I think to take Andrew's sort of overriding point is we have no choice and we have some urgency here. I mean, to really avoid irreparable climate change, we do need to see this 45% reduction in emissions in the next decade. And actually, it's Asia that faces the biggest risk. There was a survey recently that showed of the top 100 cities most at risk from environmental impact, 99 sit in Asia. And so I think this is absolutely key that we do talk about the impact that we're having where it really matters, and really driving that capital to do so. And actually, I wanted to, if I may, just pick up one other point on a slightly more positive note, which is actually, I think Asia is actually leading the pace in terms of the innovation in this space. So although there is a lot of focus around, say, the Teslas of the world and the EU taxonomy, which I think is rightly pointed to as a very good piece of regulation for Europe, actually, if you look at where a lot of the innovation, transition finance, we did the world's first transition bond in the Middle East for an airline. We worked with CCB, China Construction Bank, on their transition bond recently. We did the first ESG derivative in Asia and the first green trade finance loan in Asia as well. So I think Asia actually, in terms of thinking how we can unlock capital to really tackle this problem, is actually leading the pace in a way that many people don't realise. And the example that Harry gave at the beginning of Climate Impact X is just another great example of exactly that.
Thanks for that, Daniel. And you've given me a great opportunity to transition into the next theme in this conversation, which is to really look at some of the things we didn't do last year that mean things are looking better on the sustainability front this year. I want to pick up with you, Henrik, now. Roadshows. So, Daniel there was talking about launching these various bonds. There was a time where you had to travel around to make this happen, and look at all of those air miles that we lost, but obviously the benefit for the planet that we didn't travel all over the world to host these roadshows. No roadshows, but there's been a lot of decent upside from that.
I think the industry, both the issuer and the investors, have found new ways of operating around that, and also with arguably more efficiency. So we can pull the roadshow itself together in a lot shorter period of time. Also, there's a lot of efficiency happening around the documentation process, which is lowering the cost for overall execution. The one thing we have seen through the pandemic, or I should say post the worst time, is an exponential increase in financing using the bond markets. And they require a lot quicker execution than your traditional loan markets or other mechanisms. So the ability to do very quick investor engagement has been a step forward. I do think the roadshows will come back, though. It's a function of they'll come back in a different format, maybe not in the same scale. But I think the personal connectivity is something that investors and issuers still do want to have. And we feel that, I think particularly in emerging markets where investors want to go and see our clients, they want to see on the ground what's going on, gain intelligence from that. And I think another area where it's been problematic is due diligence. If you're doing due diligence, most of the time you want to physically go and visit the asset you're potentially buying. So I think it's going to come back. It's going to take a while, hopefully sooner rather than later. But it's probably an area where the post-pandemic era has found a good landing.
Yeah, and I do want to mention, obviously this pandemic has been really difficult for a lot of people, a lot of families around the world, and there is such huge disparity that has come about, or has certainly been exposed as a result of the pandemic. Can you just for a moment, let's just mention that, let's talk about the observations that you've seen from your perspective in terms of that disparity, not just within communities, we've seen it across the whole planet, really.
I think maybe we're at the early stages of actually seeing the effects. The pandemic in some ways was a global unifier. People came a lot closer together. Governments worked together, obviously worked very closely with the pharma companies in terms of developing solutions. but the financial impact, and particularly the liquidity that's provided, thereby propelling asset prices higher, has potentially created a greater divide, particularly for the more vulnerable. Obviously, very concerned about that. I'm proud as Standard Chartered, working in our markets, Asia, Africa, Middle East. We've done a lot to support around the pandemic efforts. We also launched a fund, for example, to specifically help out communities. But the long-term effects of ultra-low interest rates, extreme liquidity, very high asset prices, that is going to take a while to see where that lands. And I think, as banks, as investors, as exchanges, everyone's very aware of that, and we are going to collectively work to see how we can bring that gap back.
Yeah, and I think the operative word for me there was collectively. A lot of these conversations that we're having revolve around a collaborative approach, they revolve around partnership, and on that theme, Andrew, can I take it to you? Partnership has to be something that's very important, of course, from your perspective. Talk to us a little bit about that and whether this digitalization megatrend has facilitated more partnership and collaboration, or actually do you still face challenges on that front?
So if I interpret the question in the following way, I mean, MDBs, of which AIB is one, multilateralism is in the DNA. So working with governments, working with the private sector is the only way to achieve the broad objectives. I think also not just COVID-19, but I think the general trends that Henrik touched on, that a lot of funding now is coming through the bond market rather than the loan market, means that MDBs and sovereigns, I think, are very open to how do we recycle assets. So and that goes to some of the debt and the debt funding that many of the low-income sovereign countries are struggling under. But I also think it rightly reflects the fact that if you look about the sources of capital, the private sector is a massive source of capital for investing in infrastructure. You've got everybody's very familiar with public-private partnerships. They get labelled in many, many different ways. But in this environment where something like, I think 53% of the low-income developing countries have sadly have a high chance of debt distress, how they manage those assets becomes really, really important. And having the private sector contribute to that, recognizing that there is a profit motive, of which there is nothing wrong with it. It's just different agendas. I think the challenge with the partnerships is that, and one that infrastructure has always struggled with, is that generally the private sector likes to come in on brownfield and would prefer the public sector to come in on greenfield. And then it's how do you do the transfer of assets that reflects the risk reward and the fact that taxpayers' money is a rare treasure, and that sovereigns have to be hugely careful about how they contribute that. So the partnership goes to multilateralism. I think, sadly, multilateralism gets really rediscovered during stressful and difficult times. The most immediate with COVID-19 pandemic has reminded us all of that. But if I go back to the longer-term trend that I think Daniel touched on around climate change, we all recognize that the only way to tackle that is through partnerships. Recognizing that people may have different motivations, which of course there's nothing wrong with it, but the end goal in the way that Harry described it is hugely important. So AIB has a clear strategy of by 2030 wanting to do 50% of our volume in the private sector and 50% in the public sector. And that means that you have to, the team here thinks very carefully about how you engage with sovereigns, non-sovereigns, subnationals, SOEs, recognizing that, the risk reward is quite different. I hope that contributes to where you were going with the question, but let me know if I didn't get there.
No, absolutely. And we had spoken earlier about this multilateralism and the direction that we have to go in. So yeah, that was the theme, the road that I want to go down. I'm going to pick this up with Harry now, because partnership has been at the center, really, of the CIX collaboration. You have to get various parties on board to make this thing work. I do actually want to share a question that's from a member of our audience. This is from Don Ferdinando. Thank you very much for your question and for telling us who you are. What are some of the long-term goals of SIX, such as the number of credits issued, emissions covered? What is the method of carbon accounting? I will say that later in this conference, we're going to dig down a bit deeper. In fact, we have a panel running on this tomorrow where we're going to talk more extensively about decarbonisation and about SIX, so you can hear more detail about that particular initiative. But Harry, I want to talk to you about partnership and collaboration and how central that is to your hopes and aspirations in your role.
Yeah. So I want to highlight how innovative that AIIB has actually been as an MDB. So some of the capital recycling that Andrew talked about, that's not the modus operandum of MDBs. They typically have a balance sheet where they get the assets and hold. So it's really appreciated. And when we talk about partnership and collaboration, what's so important is that people come with that mindset of knowing that sometimes a topic like sustainable development, this is not easy. And we were saying just before this started that the solutions we're discussing today, in 5 years' time, potentially could be very archaic. And so you constantly have to have a mindset of innovation. And so it's such a joy when you find other like-minded financiers and others in the ecosystem who are willing to step up and try new methodologies and try new ways of partnership as well. And I think, one case in point, for example, Singapore is one of the global hubs to real estate investment trusts, REITs. And when you talk about real estate, one of the key aspects you have to watch out for is actually physical risk when it comes to climate change and climate resilience. And it's the information that investors will need in the future to ensure that the asset they invest in, and for the long term, right? The buildings are not going to disappear overnight. So that it's a good asset, and good asset is being pretty much being equivalent to having climate resilient assets that have taken into account potential changes, catastrophic changes that may come in the future. So when you think about it that way, there's a role that exchanges can play to bring parties together, whether that be the REITs who are listed on the exchange, the investors who are investing in the REITs. There are also associations that bring together these REITs. There are also bankers who are helping to arrange some of either the equity fundraising or the debt fundraising. So, how do we, as an ecosystem, help companies like that in Asia? Singapore is home to companies that have assets all around the world, including all around Asia. So where information and data is not perfect and where there's still a lot of work to be done, how can we all come around the table to make some magic happen? Maybe that is the magic formula per the title of this. There is a magic formula, and that is collaboration.
Yeah. You can make some magic happen with collaboration. Daniel, let's take it to you, because I know you've been very enthusiastic, and you spoke very enthusiastically earlier about these bond launches, for example. But for those who don't know, Daniel does publish various reports and articles that will update you on everything that's new and exciting in the world of sustainable finance. One of the ones that you featured quite highly last year was, of course, the blue bonds. Tell us, what are you enthusiastic about at the moment, Daniel?
Manish, thank you. And maybe pick up on that theme. What I really look forward to is seeing green turn into a bit of a rainbow. And I think one of the topics that we haven't talked about is the importance of effectively a just transition, which is we do need to tackle climate change, but we also need to make sure that living standards continue to rise in emerging markets. And I think this is where climate change and the Sustainable Development Goals really come together. And I think one of the ways that we can enable that is by green becoming this rainbow of different bonds. So you mentioned the first blue bond that we did for the Republic of Seychelles many years ago now, that really supported a sustainable ocean economy. We recently did several orange bonds in terms of gender finance, supporting, for example, working with Singaporean NGOs and exchanges there in terms of a women's livelihood bond that supported 200,000 underprivileged women in South Asia. And I think we need to take, if you like, the innovation that has driven green finance to those record numbers that Henrik quoted earlier on, and really support these other areas of the Sustainable Development Goals to ensure that we can drive effectively that Build Back Better that Harry mentioned, that isn't just tackling the absolute crisis and emergency around climate change, but also supporting a wider Sustainable Development Goal recovery as well.
And I'll pick up some of that with you, Andrew, in Beijing. Of course, this Build Back Better. What are you seeing in terms of the outlook? What are you enthusiastic about for the coming year?
I chatted to our technology team about this because we have a digital strategy. What's nice about MDBs is if you go to the websites, there's an avalanche, there's an encyclopedia of information that admittedly comes with its own challenges, and we may at some point want to touch on that, but we may not have time. But I asked them, from a technology point of view, what were the things that were exciting them? And so they gave me three, which I'd seen in some of our projects, which was, and this is all really around the monitoring component, which goes to the ESG, which is fundamental and sort of touches on the just transition that Daniel's talking about. But low and high level satellites, I think especially the low level satellites for monitoring is really, really important. I think also people talk now much more about the drones, but then it's the collecting and the transforming of that data through AI and the positive impact that AI can have in terms of the constant monitoring that you can have of projects, the impact of projects on Indigenous people, the impacts of projects on the ecology, the changing nature of infrastructure investments. Green used to be defined as, hydroelectric dams. That's changed a lot. So I'd say that's really the technology inevitably, but I actually like the direction that impact is going. And I know it's a bit of a dry topic, but impact reporting. And maybe it's because, in the community that I live and work in, measuring what you wanted to achieve at the beginning of the project and then independently measuring whether you achieve that at the end of the project is something that is part of the DNA of MDBs. But that adoption of impact reporting, not just financial reporting, which is obviously something I'm sensitive to, but impact reporting, I think, is becoming really important. And it's not just the preserve of, the so-called millennials. I think everybody's now grown up and realized this tipping point about what's the impact of our investments. I think so. I get excited about impact. It's probably not the most exciting answer. Everybody wants to talk about digital and technology and, fantastic, amazing things like that. But actually, I think it's the humdrum things around the reporting that will have the most transformational change. So I'll leave you with that.
Thank you very much for that, Andrew. And that's an interesting place to leave it. I just want to mention a question that we got from Timothy Ang in our Q&A. Digital optimization will inevitably lead to loss of jobs. What social positives does digitalization bring? I think when we think about impact, we do have to think about those difficult questions, don't we, Henrik?
We do. I think there are studies out there that show over time the digital change does also create jobs on the other side. So, and also may increase overall incomes as well and create wealth. So it's part of a transition period. A lot of today's conversation has also been about transition. That is really important to get those transitions correct. As we look forward, we're very excited about the future. We've had a human tragedy. Hopefully we're exiting that now. And through the disruption that has partly created, we do see a lot of opportunities. Upcoming, we have about 100+ speakers ready to give their insights, their thoughts, and their stories. We're very excited about the upcoming 3 days conference, and thank you for hosting us today and for my fellow panelists.
Well, thank you all. It's been an excellent conversation. We've got, like you said, some great panels coming up, including panels that will cover markets where Standard Chartered is very strong, Asia, Africa, so lots of lessons to be learnt and lots of opportunity. I mean, it is all about opportunity that we can identify and talk about. So it only leaves it for me to thank all of our guests today. We have, of course, to my left, Harry Cho from SGX right here in Singapore, Henrik Rabe. Thank you for joining me in the studio today, Henrik. Down the line from Beijing, Andrew Cross from the AIIB, and Standard Chartered's very own Daniel Hanna, Global Head of Sustainable Finance. Thank you all so much, and thank you to our global audience for joining us for this session.